Are you recording the screen as well?
We're live. All right. I think we're live. What's going on, everyone? Look, today, just Dom, myself, and Grittani, we're just gonna, have a normal conversation, talk about trading for the past 3 months. I know Tim Grittani, just started kind of getting back into it very, very briefly. I know he's just kind of like not a lot of screen time, but just dabbling around and doing well. Market was pretty hot here in March. A lot of good things happened, and a lot of good things happened. A lot of the momentum, a lot of volatility. So hoping to just discuss some of that, as well as talk about a couple nuances, things that I want to talk about things that I've personally struggled with, psychology-wise. I think that can be very relatable to traders. I know Grittani had a crazy trade on DRCT. I don't know if it was crazy, but I just know he had to file for it. So I definitely want to talk about that because it's comical and kind of unique. I've never seen a trader really file before. And then lastly, talk about kind of this new entry that I know, Grittani, it's kind of new for you. You used to be kind of like a buy the breakout trigger kind of guy, and you've been getting in early based off of where the longs and the shorts are based off the average weighted volume price or whatever. And I know, Dom, your specialty is like your entries. Like you get in pretty much as close as you can to where the risk reward makes sense. You get a really good risk reward entry, and you I guess the word I'm looking for is finagle that into a profitable risk reward situation. And what I'm always really impressed about between Dom and Grittani is your entries. Your entries are always, and you know what I'm most impressed about is your confidence. Your confidence when the entry is there. There's no indecisiveness. It's like, I got to be in. Here's the move. Um, and your size reflects that. And where I personally struggle is like I have generally the same entry, but the confidence isn't there where it's like, this, for an example, this play deserves 10K risk. So I'm going to put it on the line. Like I'm always like, let's be small. Let's just tread lightly and like make some decent living money and just, pay for lunch or dinner. But obviously that number is magnified. Um, and so that's kind of what I want to talk about. Just, very casual, not lackluster. It's going to be jam packed, but just kind of shooting the crap. I know there's kids involved, so I don't want to swear or anything. So without further ado, Dom and Grittani, do you guys just want to say what's up, and then we'll get into it?
Yeah. First, a disclaimer. Anything you see on here is not financial advice. We are not financial advisors. This is never a recommendation to buy or sell. Anything we talk about is just our own experience. This is for educational and entertainment purposes only. But yeah, I'm Dom. I'm the Dom to Huddie and Dom. Yeah, I'm super excited to have Grittani on. Just kind of talk stocks. I'm currently on vacation in Florida. March was pretty wild. It was my best month. It was my first green month of the year so far. I know we have a lot to talk about. Grittani, you want to do a quick little intro to yourself, and then we can just follow Huddie's itinerary and get into it.
Yeah. So I'm Tim Grittani. I have the pleasure of playing fantasy football with these guys, and usually losing to them. Yeah, I've been trading for 10 years now, full time, and the last couple of years have been more of a part-time basis, but I've been more in dad mode and helping raise the kids and being there for a lot of the important milestone moments, which has been really cool. Our 1-year-old is like just now learning to push himself up off the floor and walk, which is pretty cool to see. That's fun stuff. And yeah, I mean, it's been interesting because going part-time has been a big adjustment on my part. And as I've been doing that, I've also still been trying to gradually push size and increase, because I think I see the possibility there to do more. And that is definitely a mental battle at times. And it does sometimes get me into unintentional trouble, like having to file DRCT forms.
And we'll definitely get into that trade. Yeah, the thing about the stock market is like it's totally a you versus yourself battle. It's like you get what you put in, and there comes a line, there comes a time, especially after you've had this amount of experience, whether it's Dom, myself, or Grittani, that you have to push yourself to the next level, and that moment can be very scary. It can be very costly. It can make you doubt your existence at times. But it's definitely something that every trader goes through, and we all have to, it takes time. That'd be my best thing to say. Like, I remember like always talking to Grittani back in the day, and I'd be like, damn, like, why can't I size up? And you were just like, have some patience. Like it's really not easy to do to go from A to B in that circumstance. And so, really commend you. I've definitely seen, the size that you've been having. I've definitely noticed that you're going way over 10K risk these days, which has been your comfort level for a while. I know, Dom, you've been forcing yourself into bigger trades. I'm still small size. Again, I have my own personal problems. I think I'm a lot more emotional than both these guys. I would definitely consider them both better traders than me. I have a bit of indecisiveness, mainly to the long side. I feel like to the short side, I'm pretty comfortable. So I kind of want to start this webinar, or not webinar, just this video, going over my week. And I'm gonna do it as briefly as I can. And what I really want to talk about is the psychology behind my week, because I had a disastrous week. I'll be frank about it. I think I'm down $20,000, which for my account, I mean, it's nothing. It's not like something I can't come back from, but it's ugly. And that's what the reason I want to talk about it is because $20,000 down on the week, and it really was just Tuesday, is a very outlier loss for me. Like, I do not necessarily have a lot of red days, and when they are red, they're controlled. So the question becomes, like, why was this red day so, in terms of my stats, like, why is this red day so much bigger than most of my red days? And I think it's relatable. Like, I don't think I'm the best trader, but I do think I'm a very relatable trader. It took me 2.5, 3 years to become consistently profitable, and now we're 4 years later, and we're grooving and moving. But it did take a while. It takes a lot of learning lessons, a lot of humps and obstacles to get over. So I just want to kind of talk about, what happens when greed meets vengeance and when vengeance meets anger. And that's pretty much what happened to me this week. Just to go over the few trades I had, I was long sells. Not to get too nitty gritty into the breakout, like into the chart itself, but I like this breakout over this 4 area. I did get long dips into 4, and I had some decent size, and it spiked all the way to 5 right near close and had this kind of nasty crack towards close, but I didn't really think it was dead. And the next day it kind of gapped down and wiped me out. And I took, a decent sized loss, but a loss that was totally controllable. And it was just, going to the next trade, normal business as usual. Like, that really didn't scar me or anything. And then there was GME. And GME, I got short at 190, and I went big. I thought it was like a good opportunity. I thought the liquidity was good. I thought it was pretty extended. So I got 1,500 shares short at 190 after it spiked. And where I messed up was, it came all the way down to 160 in about 30 minutes, and I was up a decent chunk of change, and I didn't take the gains. I kept thinking to myself, like, this is up from $80. Like, it has to go lower. Like, the pop's going to get sold into. More fade is likely. All that kind of jargon that I'm always repeating to myself on first red days. And this was a situation where I just watched GME grind back on me, hold this base, and then start perking into close, and I eventually covered. And it wasn't even a loss, but it was frustration that, I let 2 really solid gains. I mean, between the 2, it's a 50K plus trade. I mean, between both of them. And I let really solid gains, especially given my year, slip away from me. And that is where things went wrong for me. And I want traders to understand that, like, the trading aspect, the part about trading, the hard part, I don't think, is the charts. Like, there's criteria, there's variables that you can qualify to get yourself into a trade. And you can put your odds in the right, like, you can put the odds in your favor. The hard part is when you get in your own way and you become your own enemy. And I'll tell you, like, immediately what I did when I covered this loss, or gain, I consider it a loss because it didn't work, but it was, I think I made 2K on it or something. I immediately got into like 4 or 5 different positions. Like, I'll be completely frank. I got into 4 or 5 things. I had way too much size, and the whole thing was like I was chasing the dream. My greed turned into vengeance, and now I wanted that money. I felt like I deserved that money. So I started just throwing around size like a kid. Like, it was so immature. The minute I saw myself doing it, I was like, what are you doing, Huddie? Like, you need to step away. You need to, like, go do some yoga, meditate, like, take a break, get your discipline under your control. And so I dug myself into a hole. Like, the GME and the cells, like, that wasn't the bad part. It was what happened afterwards that became detrimental to my week and my month. And we're still having a great month, even despite, but it's just so unnecessary. And that's the thing about trading. This is just my piece that I wanted to say to people. You really have to control your emotions. It's the emotions that are going to kill you. It's the greed, the fear, the FOMO, the forcing trades. Like, that's the part where traders start to bleed your profits. You nick away, you scratch. And I definitely did that on Tuesday. And so I took a step back. I reeled in discipline, not only in the stock market, but in my actual life as well. I oftentimes think that what you do on your personal life will reflect in your trading. So it's just about, bringing it all back together and understanding that like this is a long-term game. Like the numbers do make sense over the long run. So best thing to do is like, again, survive and not focus on just one day and just try to push forward to the next day and recoup and rehabilitate what you have damaged mentally. So that was my week. I pretty much stopped trading after GME. And like after that Tuesday, I just stopped trading. I was just, I'm done. Like I need to just take a break. And that's been good. I've been resetting the mind, resetting everything, and gonna have like a nice relaxing weekend and get right back after it for next week. So that's my thing. And I know we've all gone through our own personal psychological battles. Grittani with your big losses on LAKE and what was it, Nordstrom and a couple of others that you needed to reset your psychology because you were just not cutting losses or whatever it was. And there was a whole psychological battle that you had to fight.
Yeah, absolutely. And it's funny hearing you talk about going into revenge mode because that's exactly what happened to me after all my big losses. And your situation is at least a little different in the sense that it wasn't a big loss; it was just giving back a lot of unrealized gains. But yeah, that revenge mode is almost worse than the initial trade itself, because then you just start throwing money around and you make 5 mistakes instead of just 1.
Yeah. So,
I'm having a slight technical difficulty on my end, so I'm just going to reboot this real quick. Sorry, guys. I cannot see you anymore.
All right. I was about to pass the baton to Grittani. So the next thing I have like a little bit of an itinerary written on my phone. It's the most basic thing you've ever seen. Again, this is just impromptu. We're just here to hang out, talk to the community. If we have time for question and answers, we'll do it later. But I do want to talk about this DRCT filing that we all saw on our newsfeed. Earlier this week, it was just comical, just getting to the computer and looking at scans and seeing that DRCT had a Form 4 filed and it was Timothy Grittani. And I was like, who is that? Like, no freaking way. And it turns out that Timothy Grittani did have to file disclosure because he ended up owning more than 10% of the float of a company. So when he gets his audio back, I'm curious as to, I guess what that process looks like, A, and then B, kind of like going through that trade, because I know that it wasn't a day trade for you. And that's what's most interesting. I always love, like, I think what Grittani does really well is scenario analysis, right? He understands scenarios, he understands variables, he understands, what is causing the stock to move or what can cause the stock to move. Whereas I know like Dom is like much more technical based. He's like, don't even show me the news, don't even show me the market. Like, I just want to trade the chart for what it is. And so that's where they both differ. So I definitely want to get into the DRCT trade because it was so different. It was a stock that, and Grittani's gonna have to correct me if I'm wrong, but I think he was buying it on this day back here on the 9th and ended up selling into the earnings on, what was it, yesterday? So I don't know if he fixed his audio or not, but he's coming back.
He is
coming back.
Almost back.
Hey, bud.
Hey, sorry about that.
It's good. So I just gave a little intro to DRCT, kind of said some things that I don't know if they're true or not. So why don't you just take the sticks from me? I can give you the screen if you want. Let me know.
Yeah, sure. Well, yeah, I'll take the screen if I can figure out how to do that again. Share screen, thinkorswim, boom. Okay, let's go to DRCT. Yeah, okay. So let me just tell my DRCT story really quick. I'll keep it 100 here because this actually, like, people were like congratulating me, and I did not consider this a good trade in any way. Like, I'd give myself an F for this. So DRCT, March 9th was my entry day, and super low float. I knew it was a 2.8 million float. I knew it was a recent IPO. These have been kind of hot lately. And I managed to build in a really nice average on this. Let me see if I can get you a 1-minute chart here. Basically, I recognized the action in the morning. It was, it had the, it gapped up, weak open, consolidating, higher lows. And it was just one of those things, like during this consolidation, that I was thinking, like, between the low float and just, it was a pretty hot market recently, between all the oil runners, and it just kind of seemed like the small caps were coming back alive for the first time in quite a while. And it was a pretty tight risk, if I was risking off a lower day and I'm buying around low twos initially. So I just decided to take a speculative starter long, kind of an ABCD type setup. And then we got the perk through VWAP. And so I think I added some into the strength on the perk. I added more on this pullback into the weakness. And so by the time it was going parabolic here in the afternoon, I was at something like 250,000 shares from a 212 average or something like that. Like I was in very nicely. And I was, of course, a little bit greedy. I've had a big problem with this lately with a lot of my longs where I think that I'm going to get a lot more than I actually do. So as I'm watching this thing up in the threes, yeah, this is pretty vertical action. Yes, I'm expecting there to be a pullback, and like nothing I see between 12:30 and 3 o'clock looks all that unusual to me. Like I don't mind the pullback. I'm glad to see some rebound, and I'm really thinking multi-day potential to gap up and keep going. And and then in the afternoon, the last half hour when it starts to dip some more, I added a little more into the dip and wind up at 300,000 shares overall. My average is like 220s. And it's a position I really don't mind to be in because, Huddie, you were talking about, how you like how, Dom and I can take some big size on positions and stay patient with them. And for me, a lot of that patience usually comes from having a very nice average where all I feel like I'm really risking is gains. And so, yeah, there are definitely trades where I get back a lot of the gains. And yes, as this kept on dumping in the afternoon, I was feeling kind of stupid for not paying myself any because I think at its peaks, I was up like 300K. And I was like, why did I not take off half? Like, what was I thinking here? But again, all the things I was thinking about with it being low float and kind of hot market and the weak close, I didn't think it was out of the question that we might get some gap and continuation the next day still. So I just said, you know what? Okay, I'm just going to hold it overnight. And where I made my mistake, aside from, kind of the stubborn hold and not paying myself, was that when I initially looked at DRCT and I saw the 2.8 million float, I was looking at a third-party website. And the thing that this site also said was it said 14 million shares outstanding. So I wasn't even thinking about, percent ownership. It was just, okay, I've got a big position and I'm going to be aggressive. And then that night, when I'm a little bit like, I didn't like that week close, it was gapping down after hours a little bit. I opened up the filings for the first time and started digging in. And then when I'm looking at the filings, I see that it's 2.8 million Class A shares, which are the ones that are publicly traded, and like 11 million Class B shares, which are not publicly traded, but like have voting rights and can be converted into Class A shares at any time, like at the option of the owner. So that was kind of just like an oh shit moment because then I realized I own 10% of the Class A shares. And then that led to a nice long Google search of figuring out like, okay, well, what matters? Is it the class of shares or the overall number of shares? Do I have to file something? What do I have to file? And I kind of am like a little panicked about this because now I'm thinking like, oh, I've got to go through this whole SEC hassle. And then I shoot a couple messages to people the next day, kind of being like, hey, like, do you have any idea how I can do this? And they're like, one person was saying, they thought I should contact a securities lawyer to make sure I do it the right way, which made sense. I don't want to make a mistake on an SEC form. So then I send out a bunch of messages to securities lawyers and nobody gets back to me. Like I had one person get back to me and they just said, this isn't my area of law. So then I start going through the EDGAR system, trying to figure out how to do this myself because no one's getting back to me. And with a Form 3, that's the initial form where you say, hey, I own shares. You have 10 days to file that within like from when you bought. And a Form 4 is 2 days, I think, from your sales. So then going through EDGAR, or basically learning how to file the Form 3, you have to do it online through EDGAR, and you have to get this EDGAR account. And it's like the most poorly explained thing I've ever seen because I'm going through this application process and there's this one part where it just says like upload document here. And it doesn't say like anything about what the document is or like what you're supposed to upload. So I spend like a couple days puzzling over this, and I eventually find an obscure YouTube video explaining that like I need to print off the application itself and sign it in front of a notary, and then like scan it and send it back to EDGAR. And then I waited 4 business days, which was over a weekend, for EDGAR to approve the application. So by the time it was all over, I was late on filing my Form 3. I'm late on filing my Form 4 because I sold 35,000 shares just because I was like, I've got to take a little bit off because, that's the inner trader in me. But at the same time, I didn't want to do anything like super against SEC rules. Like I didn't want to sell my entire 300,000 shares like into this few days of rebound and then be like late with filings or anything like that. So I just took off a little bit just to, get size down a bit and pay myself a little. And those initial sells were in the 280s. But yeah, eventually it all got approved and I had to file the forms, and it took the first attempt to file the forms. I did them wrong, so I had to redo them. It was just a huge hassle, and one that I wish I just kept thinking throughout like the couple weeks this all stretched through, like, man, if only I had sold into the strength on that first day. The one other aspect of the trade I'll say or talk about, and I'm sorry this has gotten so long-winded, but obviously there was a period of time here where this thing was dipping and getting kind of ugly, and I was down on a decent number of shares, and I was kind of going through the like mental battle of like, do I just cut all this? Do I like turn it into a little bit of a bag hold? And I didn't really consider it a dangerous bag to hold because, there are a couple things that were still true about it. One, it's still like very low float. Any PR is going to pop it, give me an exit opportunity. But also there's no dilution whatsoever. Like nothing filed, no S3s, like no chance of any dilution. The only possible dilutive effect would have been if those Class B shareholders wanted to convert into Class A shares, but I think that would have been up at a 445 price or something. So I really wasn't worried about that. I don't think they're going to make that conversion choice when they're going to, take that big of a hit on it. So it didn't really strike me as a dangerous bag to hold. I knew earnings were coming up. That could possibly be a catalyst. So it just kind of seemed like a reasonable patience play to me. And that's what wound up happening. Earnings wound up being good. Unfortunately for me, I did downsize fairly significantly starting on the 24th. It was let's see. I just know I sold a decent number of shares once I had all the filing stuff figured out, and I knew I could get like my next Form 4 in on time. I decided to size down a bit before earnings just in case the earnings were garbage because I didn't want to have to deal with that with 265,000 shares and a not super liquid stock. So I sized myself down. Earnings were great. I sold a lot, spikes on the earnings. But again, it was not the best sells. Just kind of randomly into strength after hours on the 29th and pre-market on the 30th. And I was out before this thing even got above 450 pre-market. So could have been better, but at that point also I was just kind of so mentally done with it. I was just like, let me just get out of this and move on.
And where my mind has a hard time wrapping around this whole thing is that, okay, so if I'm long, from where you are, and this thing dips to 180, those 5 or 6 red days in a row, like I feel like for me personally, if that breaks that low from the first day, I'm out, no questions asked. I mean, with that kind of size, especially, like I'm not letting any room for wiggle room, and even further into earnings, like that's so bold.
Well, the thing, I mean, I guess one other thing fundamentally with it is that they've got like, what, $25 million a year in revenues. They're net profitable and trading around $2. Their market cap is like $5 million. Like that doesn't make a lot of sense to me. Like that valuation doesn't really work in my mind. One night I looked at other ad companies to kind of compare to DRCT, like other small cap ones. And I just kind of looked at like, what are their revenues? What's their market cap? And just try to get kind of a similar, like a feel of the sector, like how do I think DRCT's valuation is compared to some of these other advertising companies? And it seemed, it was kind of tricky though, because I didn't know if I should be going off of just the Class A shares or the overall 14 million shares. But even if I was using the overall 14 million shares at like $2 a share, it still seemed like it was like about right valuation wise. So valuation didn't seem like it should be something that just drives into the ground for no reason when there's no dilution present.
Were they profitable? I'm sorry, I didn't hear if you said that.
Yeah, they're not profitable annually. I think this last quarter they put out, actually they had a loss, but it might have just been extra expenses from getting ready for their IPO or something. I don't know exactly what it is. They weren't too specific in the report, but it was some random category of like other expenses or something.
I went into their filings just briefly, because obviously, and what they're like the Uber of jets and planes. Like they're trying to get direct travel options. It was confusing.
Are they? I didn't even really dig that deep.
You just look at the dilution as you always do.
Just dilution filings. Yeah, I don't usually look too much at the company website.
Yeah, so I mean, so that's cool to know. Like you really have this like way of bolstering your thesis to get yourself to hold through quite a nasty dip, and even breaking your risk. I mean, I know it's only by a penny or two, but like most traders in that moment, like the second it breaks, you like freak out because you know like underneath that is maybe a gap to fill or whatever it is. And so I think that's where traders really struggle is like how do you hold through like seemingly support breaking but also holding at the same time. I would feel like a lot of people would be like mind boggled by that.
And if it was dilutive or something like that, that would have been an entirely different story. I would have managed it differently. But I kind of felt a little stuck in it especially during like these few days here where it was dipping because again, like I was going through this whole like Edgar application process and I know I'm late on my filings and I'm like, I don't think it'd be good for me to sell my entire position without ever filing anything about it. So I honestly might get like an SEC fine or something for being late on those. I don't really know. We'll see, but not something I'm going to make a habit of. I do not really ever want to be a 10% or even 5% owner of anything again.
Well, I'm glad the trade worked out in your favor. That's awesome. I mean, that's such a funny story that you had to file, and it just shook the whole world. Like I know everyone on Twitter is like, "What? Who's this?"
Yeah, fun stuff.
So Dom, why don't you take the sticks for a bit? I just upgraded our Zoom membership so this video doesn't get destroyed.
I saw that.
So
let me get my screen back.
Where I wanted to go next is like pretty much your guys' is like, I mean, Dom, if you want to take the screen, I know Grittani, you'd have to stop sharing your screen.
Yeah, Zoom is being really weird for me. I'm gonna have to quit and rejoin again. Sorry, guys.
That's fine. I feel like I should honestly just restart the whole Zoom because we need more time.
Did you buy that?
I bought it. But it still says upgrade and 2 minutes left, so I feel like I have to refresh it.
Yeah, that's so funny. I didn't know anything about that DRCT trade in the filing, so I just heard that for the first time. That's pretty incredible. It's also kind of cool what I was thinking about when I was listening to him talk about it and his level of conviction and where it came from. Like a lot of his conviction came from the filings and the fact that they weren't dilutive, that they were net profitable. And then he also was playing technicals a little bit. And just how different, like, because I would have never, that's nowhere in the realm of anything I would ever do in terms of a trade. And just like you said, Huddie, I would have been stopping out at some sort of support level, not just kind of holding with kind of trust in the situation. But it's kind of cool and interesting how people come up with their own conviction, right or wrong, based on the factors that they do. And I was just thinking, like, where does my conviction come from when I'm in early, when I've been holding the stock for multiple days and the move hasn't really come yet? And everything I really do is based off some support level. And like you said, I rarely ever dig too deep into the filings or what the company is or even what the real name is. But most of my conviction comes from the fact of like the technicals of where did price hold when it shouldn't have. And just kind of like I always say, like I trust it with my life. Like when a level forms that I can trust with my life, like a line in the sand, I feel like there's no reason not to be convicted at that point. And going forward, like I know we're gonna get into the early entries and stuff, but kind of like why I think those are my best trades, like those early entries on big picture setups where I'm in longer and earlier than most people, is just kind of looking at those points in which I ask myself, like, why is it not going lower? Why is it not going down? At those moments where everything in me tells me it's either a short or it's going to sell off or no one's paying attention anymore, and it holds. And there are still opportunities, sometimes days around those levels where I can get an average. Like Grittani, he said he was buying I know that was an intraday, but the low twos on DRCT, and just looking at the chart, it looks like you had time to kind of sit on the bid, fill around two with pretty good risk reward. And just kind of like that's where my conviction comes from, is those levels that hold on a daily chart that I think can run. But Huddie, you said you wanted me to share my screen, or was there a particular trade
Yeah,
you want to talk
you
about?
can. We have an interesting situation happening here in 15 seconds. The Zoom wants me to upgrade. I did upgrade, and so in 9 seconds we're going to find out if that worked or not. So bear with me. I might completely lose the stream and have to reinvite you guys to Zoom, which is not the biggest deal. 2, 1, 0. What's going to happen?
Are we
Okay.
live?
I was going to keep going.
We're still alive. Fantastic news, I think. So yeah, Dom, you're really good at trusting a support level with your life, and I feel like most people out there would love to learn, like, at what point do you trust a support level with your life? Like, is it a time value? Is it a volume thing? Like, what is it about the consolidation that you're like, you know, this isn't breaking down. This is holding up way too well for where it is. I kind of know the answer, but I feel like it's better when you explain it because you are so much more confident at those levels. I just kind of get to it once I see it's breaking out. So you can take the screen if you want.
Think I'm not going to take the screen yet because I don't really have any examples. I guess I could find
I
one,
feel like the best example is
GFAI.
INDO, and I can do the INDO chart.
Yeah, you probably can because I don't know how far back my E-Trade will go. I was going to say, basically, I've learned as a trader where I succeed and where I fail. And where I fail is usually day trading, reacting to price action in the moment on a minute by minute chart. And even if you bring up INDO, like, I made a ton of money on the 7 to 10 area breakout. And then again on that 15 or 16 level breakout. And then the day I got out of my long, when it was in the 20s or maybe the 50s, I started day trading it, trying to like get more out of it. And I gave back a ton of profits because it's like so far out of the realm of what I do. But why I think I succeed so much before the move, like the consolidation period before the breakout, is because of that, when we talked a little bit about mindset before, but like the idea of like trusting a certain level and just knowing that if I'm wrong, I'm going to lose one time. Like the sticky situations I get myself into in terms of day trading, and the reason I keep going back to another position and keep fighting a stock is because I'm no longer using key levels of risk. And this is everything I really have ever learned is from Grittani's Trading Tickers 1. And that just kind of blew my mind at the beginning because everyone kind of talks about cutting losses quickly. That's what Tim Sykes said. And I never really understood that because what does that even mean in terms of the actual chart? And what Grittani was saying was like, there's levels on the chart which represent lines in the sand, which represent where a thesis is dead and where over it, the chart's completely fine. Even if I'm uncomfortable, the thesis is still there and the hypothesis could still be proven correct. And when I'm day trading and I'm reacting, those levels, I'm so far from those levels that I can take a million paper cuts and still be within that area of where it's fine, but still be losing on the stock, and it still could go on to work and I could never get my money back because I've taken so many paper cuts. And the thing about these early entries and kind of paying attention to low volume consolidation is that if I'm wrong, like the stock is dead. Like it goes from like an idea and a thesis, and it's going to maybe break out in 3 to 5 days, and I can build into a position little by little, basing off of these important levels that on low volume seem to be soaking and holding really, really well. But underneath it, like I'm just going to cut. I'm going to take a loss, and I'm not going to be tempted to rebuy because that level meant something, and I trusted that. And I think that is where I get a lot of my conviction from, because I tend to do just infinitely better when I have one shot, like, and I really trust a level and I kind of size in. And that's kind of like, I size really weird when I'm day trading because I never really hold to my risk levels, and they're arbitrary risk levels to begin with. But like when I really like CYRN, if you want to put that one up, Huddie, I know it didn't end up working out perfectly the way I want. And I got kind of ran into with those fake earnings like 4 days in a row. But this is what I'm really looking for. If you look back on that run that started in February 24th, and you just had a stock going a multi-day run from like 2 to 7. Like that's something I'm interested in. I'm probably not going to look to short it. It's just not really in my world of what I do. But there were so many times when it looked like 5 was dead, and like I even thought like, should I be short? Like this thing's going to fade. Look how much room it has to come down. And 5 kept holding, and I absolutely love it on these type of charts when a whole dollar or just an exact number holds so perfectly. And like I think like it held 502, 503, 505, but basically 5 was the level that on when no one was watching at low volume, it continued to bounce off of. And I don't have any filings or insider information or news or anything that was basing off of where my conviction came from on a chart like that. But I just continue, and this is something me and Huddie have been talking about in our streams lately. Like, if it's not going down, it's got to go up, right? Or it can go up. And that's kind of the thesis I've been building a lot of these early entries on, is why is it not going down? And just kind of, because I'm a pretty new to listed stock trading. Over the last 2 years, I've been kind of building my strategy, moving over from OTCs and kind of conforming them to listeds. And what I love about OTCs is low volume consolidation. That's what the OT swizzle is. It's these stocks that they spike and then they hold up even when no one's looking at them. And to me, I'll never know the answer to that, who's manipulating it, if someone is manipulating it, if it's an algo running, if it's just a big person holding it up, or if it's a short seller won't let it go down and wants more size. But I just kind of look for those spots in which abnormal action is happening when no one's looking at it. And that really is my biggest edge, I think, in my opinion, is that I'm constantly watching these tickers that people have kind of moved on to the next hot one. And something like CYRN, I just kept asking myself, why is 5 not breaking? It's too close to the highs, where it's like right within shooting distance of those highs to go break out. And there's a ton of room to come down, and it should be lower, but it's not. And so that's when I kind of move into the technicals and kind of figure out where I want to attack. But for me, again, using kind of what I learned from trading tickers, like the first thing I'm identifying on these charts that are holding up for breakouts is like, where's that level that is kind of the line in the sand that I don't expect to break, because it's been proving to me on super low volume that it's not breaking for some reason.
Gotcha. And kind of going from there and bringing Grittani back into this, what you both have been doing subconsciously without even knowing that you're both doing it, is you guys have both kind of morphed from day trading to swing trading for completely different reasons. Grittani, you have a family. Dom, you have an addiction to golf. So oftentimes, like, more of recent, you guys are having these very similar entries with these very wide expectations of where the stock can go and should go. And I know what you guys both do really well is your entries. You're pinpointing, where the risk reward is, where essentially where shorts are going to get screwed over, and you're capitalizing on that movement where you guys both have weaknesses. And you guys don't even talk that much, but you guys are such similar traders. Where both your weaknesses are is your exit plan, and like where to exit, and hanging on to that piece of stock. Like you were saying earlier, Dom, you don't like letting the shares go away from your account when you have such a good entry. Like, it's almost sad to sell. And like I used to always say, like, taking profits is my least favorite part. And people would say you're insane. It's like, but like, you understand, like, when you have such a good entry and you've put hours into like getting that entry and figuring out the risk reward, once it starts to work, like, you don't want to get rid of it because it's a good situation. So that's kind of what I want to start talking about. Like, we already talked about entries. Grittani, you also have this anchored VWAP approach lately. Why don't we get into that real quick? Do you mind?
Yeah, sure. So, anchored VWAP is, I think it's a very interesting indicator. And I'm kind of still in the early stages of looking into it and figuring out exactly how I want to use it. Because another thing you could do instead of just using anchored VWAP, which is this custom script I got from Scripts to Trade, is you could just use VWAP, like where did the VWAP end on the day the resistance was set, or something like that.
Do you want me to share your screen?
Yeah, I'll grab my screen back. It's probably gonna boot me again once I try to give it back, but that's fine. I'll do it really quick. So yeah, there's a few things I want to build off of what you just said. So first of all, just talking about time frame and how you said Dom and I are almost more like swing traders now. For me, part of that comes from the fact that I think I saw someone in chat say breakouts, it seems like, have been trashed for the past like 6 months or a year. And I would agree with that. Like back in late 2020, early 2021 would it have been? That's when we were kind of in that period where you have a multi-day breakout and the next day you get like a 50% gap and then more squeeze. Mm-hmm. And it was like more times than not, that seemed like the outcome. And lately it is a lot more of a like gap down, week open, and then we'll see kind of thing. And I have still seen plenty of successful multi-day breakouts. Like, INDO, like that one, how much choppy garbage did this thing do in the 12 to 15 range before it finally decided to blow off and go parabolic? And even that wasn't easy because of the day on the third here where it had the super weak flows, where it dropped from like the 20s to 16 or something like that. Or
They
18.
got me.
Yeah,
Got all
I
of
stopped
us.
out, and well, I didn't stop out, but yeah, I took off a lot of size into that too. And then and then it goes from there. So and that's why I think it's so hard also to figure out exits for Domini, because part of trying to judge a squeeze is figuring out how badly the shorts are bent. But in order for shorts to get very badly bent, you've got to have those huge pullbacks. You've got to have those cracks where it suckers them in, and it looks like, oh, the stock is dead. And it's so hard to hold through that as a long, because it's meant to look really, really scary and like the stock is finished. So that's how you wind up in situations where Dom and I, we get back, half of a huge unrealized gain before we're like, oh crap, maybe this really is a dump and it's not just trying to trap again. So it's a kind of annoying game to play. The whole like wider risk patience thing. And I've had plenty where I get back a lot of gains. And that's part of the reason why I'm doing more of these consolidation initial entries like Dom does, because if I can get that really tight risk reward, it's really easy to get big size on the trade. And it may be a lower success rate, but it just gives me a chance to position myself so much more comfortably, where I'm buying near support, building in as it's working, and then winding up with a really big number of shares, ideally as the squeeze is really starting to begin. So anchored VWAP, I've talked about that a bit in a previous webinar I did, but let's see if I can remember my dates here. So the basic idea of anchored VWAP is that I'm looking back to a resistance day. I did it with INDO. I did it with, yeah, I'll show INDO. So INDO, for example, if I'm looking at this chart, and I think I was doing it off of the 28th, if I look at the action on the 28th, I need to get to a 5-minute chart here. And sorry, bear with me here. There's that second. I've just got to get everything set up here.
That's fine. As you're getting set up, yeah, it's talking about the exits again and those harsh pullbacks. Like, it's so funny. Like, I talk to Dom pretty much every day while we're trading. We trade like just together or whatever. And it's so funny hearing him narrate what he's thinking. He's like, in order for this to work, it's got to get ugly. Like, there has to be a pullback. The shorts have to get comfortable. They have to want to add. And that's where it gets interesting. And like you said, like, it's so hard as a person in this position with lots of size to even want to hold through that pullback while it's panicking. So it just goes to show there's so many different layers and levels of trading that it's just bonkers, honestly. But it's definitely figure outable to some extent. Like, there's a method to the madness, I would say.
Well, I think it's a lot about putting yourself in the position to where when you're sitting through those uncomfortable situations, it's unrealized gains you're working with, not like the potential for a big loss or something. It's not like it breaks through the support level like bad during the consolidation period. I'm like, this is where all the shorts are going to come in. No, that would be like, it's over for me. But I would also say the more I'm getting experience in trading this way, it is becoming more and more difficult to find out the criteria and the factors for what those during those uncomfortable periods. Because what I took, like what happened with INDO, what Grittani was talking about that pull from like 25 to 20 right at like 3 p.m. on that day. And when Mullen the last week or the week before was crashing from 420 to like the 3 area, I was like, is this the same type of thing? And I ended up sitting there giving back half my unrealized because I couldn't decide in the moment if it was a big trap or not. And then at the time I realized it's a dump, half my money is gone.
$10 says Grittani did the same thing.
And it's like, sometimes, like you were talking about earlier, Huddie, the disaster situation, I think they're all different. Like mentally that drained the F out of me because I had played that one so well and done such a good job on it. And then to kind of throw away half unrealized, not really throw it away, but like, you miss time and execution towards the end and it throws off what you've been working for 2 weeks. And it's the struggle right now I'm trying to work on. Sorry, Grittani, you can go back to
Oh,
what
all good. No,
Anchor
I need
VWAP.
a sec to gather my thoughts on this. Yeah, so Thinkorswim or Speed Trader or something like that, like DES, I mean, like whatever you might use for your charting. Typically, what it does, if you are looking at VWAP on the day, is it resets every day. So this is a few different days on this chart right here, but you can kind of see how, like, you know, on the 28th here, the purple line is the intraday VWAP, and then the next day it just kind of starts off completely fresh. What anchored VWAP does is that it will, like I set anchored VWAP to start from the first pre-market print here on the 28th, and then it kind of does like a cumulative total. So it doesn't restart at the end of the 28th. It just continues with the volume and the price and just keeps on tracking it and drawing the line. So the way I like to use anchored VWAP is I like to look at a chart and, you know, so the 28th, I picked the 28th because up till that point, that was the highest that INDO had reached, not including pre-market actions. There were a couple weird pre-market days that like went up toward 20 before that. But I usually just judge a high off of intraday market hours after the bell. So what I'm looking at on this day is, you know, if this is the day where the high was set, first of all, the average trader on this day at the close was underwater if they were long, or they were profitable if they were short. And I'm kind of trying to think like in terms of like the smartest short sellers, you know, like if let's say up till this point, all the short sellers have been really patient, nobody shorted, they recognized how dangerous INDO could be, but they all got short on this red day where, you know, the high was set. And then they were trying to swing it back down towards, I don't know where it came from, $5 or something like that. Well, your average short is in, and I just kind of like to track like where is the average trader. And I'm explaining this really badly. I apologize for that. Not very eloquent today. But point being that as you look at this anchored VWAP line and it does the cumulative total of all the traders on this day, or this day maybe shorts add in, and then this day, it kind of comes out to a pretty perfect little top right here, where we had this intraday perk up into the little anchored VWAP area that stuffed a couple of times and finally broke through, and that was kind of the start of the squeeze. And that is where, you know, your average trader between the day the high was set and now, if they were short, your average short is now underwater, and that is where a squeeze could begin. So I'm thinking about it in those terms. And you know, I do like to use the anchored, but I'm also thinking about just, you know, the judging it off of just the VWAP itself on that day. So another way I might think about it, if I'm not using anchored and maybe you don't want to get this scripts to trade script, well, then you could just look back and see where did VWAP close on the 28th, and it closed at 1393. So same sort of thing can apply where, you know, maybe you're waiting for the 1393 area to break out. It didn't really do it as cleanly on this one, but I've seen other examples where it is a lot more clean and a lot more perfect off of the VWAP on the resistance day versus the anchored VWAP. But point is, I want the average short from this day to be underwater. And there are a lot of like little fake perks through. So in a lot of cases, what I'm looking for is a couple tests, you know, near the area, maybe slightly through, and then a higher break kind of situation after some consolidation. So it's kind of a familiar concept in that sense, but it's just adding another key level to the mix.
Totally. So if you throw the sticks back my way, or I guess I can do that manually.
Yeah, sorry. I'm going to show one more quick example of HYMC because we can talk if you don't mind.
Do it.
One more quick HYMC one. What day was it? I got to figure that out. Well, talking about overstaying on HYMC, I can say that I was long a lot of this from the low twos, and, you know, of course, I got up into the mid threes pre-market this day, and I gave a lot back and sold into this panic on Tuesday. So that sucked to get back 100K on that. Still made 100, but in this case, what day would we have gone off of? I just want to show one more example since INDO is kind of not perfect. Going off of, okay, here we go. Yeah, the 15th. So let me just go back to the 15th really quick, and then I'll explain my entry on HYMC. and how I was using VWAP for that. So you look at the 15th, closing VWAP on the 15th was 195. So I have that number in my mind. And then on around 328, that's where I bought. And I'm thinking about that 195 level. And here you would see that we had kind of like a morning spike kind of action. Not really any real consolidation, but we perked through that level. I actually thought this might be like a home run short into that VWAP level this morning. I took a really small loss on a shorting up into this because I thought it would be like a resistance type situation with a big ATM. It wasn't. I had to cut the loss. But I didn't buy right as it perked through 198 or whatever that level was the first time, because this is all one big morning spike. It perked through. I let it perk through, and then after pulling consolidation, when it kind of seemed like it was building back, I built into a little bit long up here into the higher lows. And then as it perked up and through and had the high of daybreak above the VWAP level, that's where I really sized in. And then I was in a very comfortable overnight situation where unfortunately I didn't really pay myself that great pre-market, but still it was plenty of opportunity for a nice gain. I still took me to the move. So now I will kick it back to you. It's just one more example of kind of similar concept.
So I'm going to add a third example, and you can tell me if I'm right or wrong. I don't know. Can you see my screen? Are you on the Twitch?
For whatever reason, I can't on Zoom, but I can on
Twitch.
Your Discord or Twitch channel. Yeah.
Yeah. So the way I've only dabbled with this. Like I saw you mention it on Twitter, so I thought it would behoove me to just throw it on a chart. And I heard what you said in your other webinar, and so I've been dabbling with it. And the one that I did it on was AGRI. Very similar story where this is the big squeeze day, and so I set the anchored VWAP to the squeeze day. And continually it popped through, but it didn't really consolidate. And you can see that like this $4 level starts to become very significant. Topped out a number of times, and it was on this day where it started consolidating at the level that I started buying at 4 in anticipation of this big 518 break. And it worked really freaking well. I mean, to my surprise, like that's generally not the end. I used to be the guy kind of waiting for it up here, and then I would never buy it up here because the risk reward is so trash that like I can only have so much size and like so much conviction that it really wasn't worth any kind of risk. So you can correct me if I'm wrong, but this is kind of what I think this is a good example in my opinion of a stock that like keeps bumping against this anchored VWAP level, and then eventually, as we consolidate at 4 and push through, this is what started the squeeze, where all the shorts that have been shorting above this level for the past 3 or 4 or 5 days are now going to have to either face the consequences of too much patience and or start the adding process.
Yeah, and can you pull up the daily on AGRI really quick?
Apparently not.
And can you zoom in back to October, like where that last huge volume candle was?
October?
No, further back. Yeah, you got zoom back out again.
There we go.
Yeah, right there. So that was October 27th. Yeah. Just off the top of my head, I think the VWAP on the 27th, I want to say it closed at 494. And it was a perfect reject spot for those 2 big volume spike days in mid-March, where the first one, it was a big push, barely got through 5, so like just above the 494 level, and then faded back hard the rest of the day. And then its next attempt did the exact same thing. So it can also be used as a like kind of a shortened resistance type thing.
And I think it's very similar to like, I think I could totally be misspeaking here, but I think ADF, which is a guy on Twitter, All Day Faders, if you guys don't follow him, he produces great information.
VWAP Boulevard, yeah.
VWAP Boulevard. I think that he talks about it all the time. So when you're saying that the VWAP on this big day in October, you're saying just VWAP, or did you anchor it there and that's where it closed? Or I think you're just saying VWAP closed at that day, right?
I was just talking about the VWAP, like where it closed on that day in this case. But honestly, there was so much volume that day and so little since then that I wouldn't be surprised if it was still like a pretty similar level.
Yeah. Cool. Well, that kind of wraps it up for what I had planned to talk about. If you guys have anything else you guys want to discuss, it's open floor.
Well, I'd like to ask Grittani, if we both struggle with exits, what are you doing to kind of counteract that? I know my issues. I know I said I get attached to my shares. I don't want to get rid of them. but it also is some sort of like it's an emotional battle of I've seen so many runs so far that I don't know if I'm holding a like the next black swan, and I don't want to get rid of those shares, but I also want to pay myself a little bit. And I also deal with a situation where if I pay myself any, I tend to unload the entire position in the next 5 minutes. What I've been doing lately is trying to dabble with like specific price targets, like really using the daily chart to decipher, previous volume on the daily chart, behaviorally on the stock, how much percentage wise range does it have on its big run days, and it should be able to do consistent with that going forward. So what like using that to kind of predict price targets and kind of force myself to be patient for those levels before I sell any. Um, I really try to, as I get into these positions, pull back away from the minute by minute action. Like you were talking about with DRCT, like, yes, it was like kind of speed up parabolic, but you didn't take any off because once you kind of made the decision not to, it kind of consolidated, looked pretty fine, and you've seen stocks go higher from that area as well. I guess what are you working? How are you working on getting better at exits? Because I think we kind of live in a world where we think we're going to someday perfect that. I don't know if that's ever going to be the case. It's kind of putting yourself in a position to be really right a very small percentage of the time, and then the rest we still want to be making good money. And that's kind of why I love this. You talked about having it's a low win rate, like buying your consolidation, buying these consolidating stocks before breakouts, and that's what I do. And I have a pretty low win rate. As a trader, I have like around a 40 to 45% career win rate. But I know how to make exponentially more when I am right. And it's kind of always putting myself in these risk reward situations where, a couple of years ago, I could risk $200 and make 10 grand plus. And now I'm trying to do that with 2,500, 5K risk. Kind of how are you going about practicing this and learning how to be better on your exits once you kind of built that perfect position?
Yeah, so one thing that I'm trying to take into consideration is market environment, first of all, because I would say in the last month we have been in a market environment where we have seen more of the big multi-day squeezers, some breakouts where we do actually get decent gaps up. But for months before that, we weren't really seeing a whole lot of that. So I think there'd be a little bit of a difference in approach on my end, depending on what market environment we're in. Like if I want to try to be a little bit more aggressive or not and hold a little longer. But yeah, that's a really great question you asked, because I struggle with that too, because it's such a hard thing to figure out how to improve on. Right now, the best idea that I have is like I feel like I do read pretty well, like when we're at least going to have a short-term top, like INDO, that day where I got scared out into the weakness. Like I could have timed that sell pretty well into the 25s, but I was thinking, a couple days ahead, and where did I think it could possibly be in a couple of days? Same thing with DRCT. Like I read it wrong in that case, but I was thinking a couple days ahead and thinking like, oh, this thing could go, $5-6, something like that. But at the time, when it was having that big push into the 350s, I was thinking like, okay, this is a big speed up. This probably will stop and pull back soon. So I feel like what I need to do is I need to adjust mentally where I am taking off into big spikes like that with the plan of re-entering on the pull, and just trying to mentally treat it all as one position still. And that's really hard to do because you just kind of see that average in your account. You see like where you're in from. And I think that like where I get caught up is I think about it differently. Like let's say I sold on my DRCT into 350 and rebought a ton of it into that 250 dive into the close. Then the next day when it's trading down near $2, if I panic out and sell some there, that looks like, oh, I just took a nasty loss on DRCT, when in reality, I'm still up pretty good overall between the two trades, which are like, the second trade is really just an extension of the first. So I think I need to kind of rebalance how I think about that and just make it all feel like one position to me, or maybe I've heard traders talk about, they trade around a core position. So maybe like 100K of that DRCT is my like core position, never sell it. And then the other 200K is selling spikes, rebuy dips, selling spikes, rebuy dips, and just keep doing it until it doesn't work. I think that overall that might be a much more profitable approach. It's just that mentally I'm not there. Other than that, I I am kind of coming up dry at the moment. I don't have a whole lot of ideas yet as
The
to
next,
perfecting that.
the
Because
next,
it's
the next,
multi-day patience. That's what's so hard. It's multi-day. So much can happen overnight. So much can happen. Yeah, I don't know.
I think the next stream that we have, we'll have to get Jack Kellogg on this to talk more because what Jack Kellogg does really well. He's been, I don't know if you've noticed lately, but he's been doing really freaking good as of the past year and a half. Just taking size when he needs to take size, and he's really good at paying himself and getting back in on pops like that get back towards the air. Like exactly what you're saying, right? He's really good at taking like, and the reason he does is he takes such big size, $500,000, $1 million positions that he wants to pay himself, even if it's like a slight dip, like on a first red day. Like he just wants to get himself paid so that he has that cushion to continue to get back to the real size versus the risk that should not or will, like statistically would not break the resistance that matters. And he's been killing it with that, just keeping himself comfortable with massive freaking size on some of these first red days and breakout days. He's really grown. It's crazy. So we'll try to get him on in the future and maybe have the same conversation.
Yeah, but I think that's good advice. And something I struggle with for sure is actually trying to understand, it's actually believing my understanding of the market temperament and what stocks are doing, what that particular pattern might be yielding at that point in time. Because there's periods where breakouts go 15-20% and then go red on the day later in the day. There's times when when stocks are gapping big on breakouts. There's days when you show our first red day and you get 2 or 3 more red days, and some days where the first green day comes immediately after. And I think I ignore that a lot of the time because I have such great entries, and I want them all just to be the perfect ones that extend as far as possible and as many days as possible. And in reality, I need to probably turn some stocks that in a perfect market would be a 3 to 5 day trade into a 1 day trade and kind of just shorten the time frame of the trade. But I think that's great advice, and something a lot of beginners especially don't do enough is that gut feeling of what the market's been producing, and kind of tailoring what you're doing to that, because it can be very telling. And generally in hindsight, you remind yourself like, hey, breakouts have been doing this type of thing lately. Remember when you just ignored that and thought it was going to gap up tomorrow when we haven't seen a stock gap up in 2 months? So that's something I definitely need to take into consideration, at least trust myself and actually implement it during those periods.
And you did a really good job.
One more thing I'll say, and then I got to bounce really quick.
Okay.
Sorry, but one more thought I have is one thing I think a lot of the huge multi-day black swan squeezers have in common is that they are trading pretty much at or near all-time highs, or at least 52-week highs. We see some of these breakouts where it's like, beaten down 1 year charts, but then it's breaking out past like $1. And, you get decent moves on those, but a lot of times it's not like crazy black swan style. So I think that if I save my extreme patience for the lowest float, at all-time high kind of situations, that I'll be a lot better off, and then maybe pay myself a little quicker on the rest. Because, like that AGRI you talked about, Huddie, like when I thought that breakout was going to go a lot further than $6, and in reality, it was still below the highs from that huge volume day back in October. Something like, MULN, I thought was going to go a lot further, but that's a beaten down long-term chart. But INDO, that was like at near all-time highs. Old ones I've had, like APT, at or near all-time highs. When that thing broke out and I rode that up to 20, I think it went to 50 or something like that. There are 40. Okay, yeah. But like that's the one common thing that's kind of sticking out in my brain right now with a lot of them, is that like the actual breakout is happening like blue skies above, even if it's like low volume candles above. I think that may play an impact still at some points. So that's my parting thought. Sorry, I got to bounce.
All right.
It was fun. Thank you guys for having me on.
For sure.
Yeah.
Have a good night.
Yeah. Good night, guys.
Thanks for time.
See you, bud. So we're gonna open it up to question and answer now. If you guys have questions, I haven't really been reading the chat, but we're happy to answer your questions. We're happy to run this for a couple more minutes. If you guys do like what we've been talking about, Dom and I do twice a week webinars on huddieanddom.com. We just do trade recaps, talk about psychology. What I really liked about what Grittani was just saying about or what you were saying about keeping that pulse on the market and like changing your expectations for what's been working. That's what led to my biggest trade on INPP. And it was basically just like, INDO came around and this breakout where, essentially you were buying it on March 2nd, and it worked to like a good degree. I mean, it did have a nice gap up from 13 and the next day is 25. I mean, that's a solid move. And I just remember having really small size, and coincidentally, it was like just 2 days later that INPP sets up. And I couldn't stop thinking that, like, if INDO just worked so well and gapped so well, like, why would not INPP in the same kind of fashion? And that's what led to my aggression, at least, on INPP. That's why I took the size I did. It was just like, I'm going to take what I learned from INDO, I'm going to take what I learned from the market and apply it to this very similar setup in the same sector just 2 days later, while the sector is still violently hot. And just keeping that pulse on for the past 6 months, February, January, all the way since CEI in October and ILUS, it feels like every single breakout has gapped down and gone lower after, a day of strength. So just keeping that gauge on the market and learning from it, I think, is super important. To tailor your trading to what the market is telling you is super important.
And kind of going off of Grittani's parting thoughts, if I can remember it. Yeah, and because that's what we actually talked about this morning on the live webinar, was I was putting too much conviction and bias into MULN the last few weeks on a chart that it has a lot of the hype, it has a lot of the retail interest, the shorts were caught. But again, on a daily chart, it's a beaten down chart, and I'm putting too much conviction into charts that just aren't set up like he was talking about, like potential black swans. Of course, there's going to be that stock that's going to be near at lows and then go and break everything and go blue skies, but that's an anomaly. It's not one to base your every week trade off of. But the only thing I wanted to add was really understand the situation you're in, because most traders miss out on opportunities like INPP and INDO because they treat them like regular trades. And I'm not going to say I went into INPP thinking, hey, this is going to be my biggest trade ever. I didn't think like that either. And I know you didn't think that way either, but we knew the situation we were in. We had a week or two of the oil and gas stocks moving. We understood the situation in Ukraine. We understood where their daily charts were, where the shorts were caught, where the illiquid consolidation volume was at. And then, putting that all together on that Friday afternoon on just a really beautiful listed breakout, just understanding the situation you're in and how, life-changing that type of trade can be if you put all those factors together, and realizing that type of trade comes around 4 times, maybe a year. And, I'm trying to take that type of aggression and conviction and bias and put it onto a stock that is just a bottom feeder stock that goes from 1 to 2 and then it's consolidating and breaking out over 2, and it actually went 100% up to 4, and I'm acting like it needs to go to 8. I'm not saying that those stocks can't do that, but maybe something for my own personal trading to kind of fix that exit problem is really understanding what situation I'm in and understanding, being situationally aware of the setup and being like, why should this run? Where should this run to because of the situation it's in? And is this one to get ultra aggressive on, or is this one to kind of size out into and just treat it like a normal trade, and find out where that type of trade belongs P&L wise for me, and then where a home run type of trade, maybe a 6-figure trade, belongs, and kind of start to separate them and not treat every trade the exact same just because I have the same approach and the same entries, because the end result is going to be different depending on the situation.
Yikes. Did you see IMTE, by the way, lately?
Yeah, 2 things. I saw that. And do you see GME after hours?
Who?
GME is at 200 again.
No way. After hours? That's crazy.
And
That's
for
gonna
those of
ruin
you who
someone's
act,
vacation.
I have not had my pulse on the market as much this week. I am, like I said, on vacation. This is my time to really step away a little bit. I did nail GME long from Friday to Monday. And sells as well. I screwed up that sell, but yeah, that's why I'm freaking out about GME, because I just saw it. And I also just typed in IMTE. Someone brought that up in the chat, and that's insane because I was shorting that in the 11. I nailed that one in the 11s. And that's not even a horrible breakout over 12, to be honest with you. Not even at 18 either.
What on IMT?
Not really for me, though. That's scary. That's scary.
So what Dom and I have been doing lately is we do go live on webinars twice a week to just discuss trades and discuss psychology. We have a Discord chat. Grittani's in there. We're both in there, obviously. Jack Kellogg's in there. Just trying to add to the community. Like, trading is a pretty lonely endeavor, and we got a lot of information to share, and there's some kind of gratification to giving back to the community. I know that when I first started, I used to ask a bunch of questions. Like, I used to be in the Tim Sykes chat, and I'd ask, Ducks all these questions, and the only person that would ever answer me was Grittani, actually. Back when I was just like, just a new trader like anyone else. And I always told myself that if I ever made it and I actually could like give good information without like the blind leading the blind type scenario, I would. So Dom and I, we did kind of go out on our own and create a website, huddiedomtim.com. It's really just low key. It's just us two, just again, twice a week webinars and just finding ways to bring content and provide good information to the community, being absolutely transparent, bringing the traders in that we've known for 5-6 years. Like, if you guys don't know, like Jack Kellogg and Dom, they lived together for what, a year, maybe even more. I've known Jack Kellogg since he had 20K in profits. I know of Kyle Williams since that long. I basically lived with Roland, and Tim Grittani is kind of the guy that helped me become successful. So just trying to utilize our assets and bring everyone to one centered location where we can, bounce ideas off of each other. I think our end goal is to make our chat room like a really good scanner, for instance. Like I know Dom doesn't even use a scanner. He kind of relies on me to scan, and then he filters out all the BS that I send him. But the ideal goal is to get everyone to a trading level where we don't miss, the IMTEs as they're breaking out of a key level, right? Or whatever the stock is, right? We want to create a community of traders that actually know how to trade and actually provide not only yourself value, but us value. If you guys are interested, if you guys do want to learn more about the way we trade, if you guys want to see trade recaps, I know like Dom was going to get into it. I don't know how much time we have. I have to still go eat dinner. But like Dom was, I think you were buying GME at 147 and then you just went golfing and sold it into like 180s, 190s. And we don't really have time to go over the specifics of that trade. But that is what we do. We just, we make these trades throughout the week. We talk in the chat room and we do our best to recap the trade and answer your questions. We do it twice a week. It's fun. It really is. Aside from that, if you guys haven't seen me tweet about it, we're doing an in-person bootcamp at the end of April. That is the way that I became successful. I used to go to the in-person bootcamps at Sykes events, and really the way I became successful is I talked to Grittani, Dom Mateo, Jack Kellogg. I talked to those three people. I networked with them. We became Discord friends. We became texting buddies, and we built, a Discord channel. It used to be me, Dom, Jack, Kyle, and I think Papa John was in it for a bit, and we called ourselves the Infinity Stones. And Sykes is kind of like the gauntlet, the glove. But Sykes wasn't in that chat with us. It was just us five, and we were all growing, kind of fighting through the weeds. This was back when we only had 100K to our name in terms of profits, and we were able to take this occurrence where we all met each other and we're all very like-minded and build each other up out of that. And we're all still very good friends. We all still talk every day. We run ideas by each other. And Dom and I want to create that experience for you guys, knowing, how important it was in my trading. Like, it was literally, I remember the first day I went to a Tim Sykes event and Tim Grittani was right there. And I said, dude, I'm going to sit right next to you. And I'm going to I'm not going to creepily be over your shoulder like a crack addict, but I'm going to ask you questions and I'm going to pick your brain. And guys like Grittani are very open to answering these types of questions. So this, Dom and I are just trying things. I know Dom needs a vacation from Michigan, so we set it up in Scottsdale, Arizona at the end of the month. We're gonna have Jack there. We're gonna have Kyle there. It's gonna be me. It's gonna be Dom. It's gonna be Jack Daniels. So many 6-7 figure traders. Again, just trying to recreate the experience that we once had. It's a lot of value. It's a bit pricey of an event, but again, we're renting out a big room for everyone. We're doing cocktail hours. We're doing axe throwing events. We're just going to keep it all busy, make sure that we're all commingling, not just live trading, but also hanging out outside of trading hours so that you can, we could leave the trade behind and just, have a beer and shoot the crap or whatever it is. That is happening at the end of April. You can find more information about it on huddiedomtim.com. We put a lot of work and a lot of effort and injected a lot of things into it in order to make it what it is. And at the end of the day, it's going to be fun. If it's going to be value, it's going to be benefit, it's going to be fun. And I think the best way to learn is while having fun. So if you can make it out to that one, great. I think you should. I think it could be very instrumental to your trading to actually be there live while someone's trading and ask the questions live, like what's a lower high? You know, there's a 5-minute lower high and a 15-minute lower high. Which one do I trust? That used to always be my question randomly. I was like, you know, you tell me a lower high is there, but then like I look at the chart an hour later and it's breaking out of lower highs. Like, what's a lower high? And again, that was like 6 or 7 years ago, and now I understand that charts can morph and form and shape into different shapes as the day goes on. But it's those kind of questions that you get answered. So if you guys can make it out, we'd love to meet you. We'd love to get to know you. That's the end of April. If you guys can't make it out because it's it's like not enough time to really plan and stuff, I think we'll do our best to do more in the future. I mean, depending on this one really turns out, we'll kind of dictate what we want to do in the future. But if not, this live event, HuddieandDom.com. If you want to be in our Discord, if you want to see us trade recap twice a week, we bring on guests. Jack Daniels was on it the other week, number 7. Big short seller. Jack Kellogg was on the week before that. Again, these are just homies. Like we're all just guys that have made it and don't mind talking about stocks. Like we emphatically, I think the key to success is like being obsessed, right? Not to like a point where you're like hurting yourself, right? But like be obsessed, dive in, whether it's the community, whether it's the charts, whether it's the information, the research, the due diligence, like you need to eat, shit, and breathe stocks. And that's not just the charts. There's other aspects. There's other networking capabilities that, again, that's what we're trying to provide for you guys. So if we can get to know you, if we can make it out there, great. If you guys want to, you know, just join our community, also great. We want, you know, dedicated people that will, again, influence the chat. We don't want people in there that are just all of a sudden going to start trading options and cluttering our chat with options. Like that's not what we do. We will reprimand that. We don't do like, you know, alerts. We don't want anyone to say, hey, you know, here's Tilray. Thoughts? Like that's never the question we want. We want you to be able to say, hey, this is my thesis. This is what I think is going to happen. You know, am I on the right direction? Am I on the right path given these factors? And then we can talk about the certain variables that we go through, the certain charts that we like, the constructs. We really want to get away from like everyone just trying to get rich fast and like put in the work to build the thesis and say, hey, Dom, like I have this multi-day breakout. I like this support. It's holding up on low volume. Like it looks like it's curling back up. What do you think about the potential of a breakout? And then Dom can actually answer that question. But where we get annoyed, where we start to, you know, ignore people is when they say, you know, GME 200 thoughts. Like that's not a question, and that's not going to help you become a better trader. So this is just what we're trying to do. You know, we just started doing it about a month ago. It's very low key right now. We're not trying to blow it up. We think, you know, as well as with the boot camps and our community, the smaller we keep it, the more attention individuals get. And that's what we want to do. We want to give you guys attention. We have the time. Generally not trading very active, learned how to be very specific and meticulous about our trades. And we hope to get most of you who want to give us a chance to help you with that there, to be meticulous, to be specific, to not overtrade. You know, how do you build these skills? How do you build this discipline set? And it's not just me and Dom. Dom is a long bias trader. I am a short bias trader. We can both go both ways, but you get the ability to not only have a one-sided thought of a chat room, right? It's not just me, it's not just Dom, it's Jack Kellogg, it's Tim Grittani, it's Jack Daniels, and again, a ton of other 6-7 figure traders that we've met, you know, at Traders for a Cause and these other networking events that other traders put on, that again, just build the community, build it, so that again, a bunch of like-minded traders in the same room. That's the key. It's not like, you know, there's 10 option traders and there's 10 OTCs and there's 10 listed and this guy's trading crypto and that guy's going NFT wise. We're finding like-minded people, and if you like the way we trade and you like what we've talked about in this, like the way to get more access is through HuddieandDom.com. So that's my spiel to you guys. Dom, if you have any other comments, if you have any other trades you want to go over, I know the marijuana sector was hot. We're going to try to get Cody Pavlak on the next one. He was going to join last minute, but he's in the Bahamas, so that didn't happen. Do you have any other last comments, thoughts, feelings?
Just referring to the boot camp, yeah, we've been to a lot of in-person events, and I absolutely love in-person events. I go to them anytime I can, whoever's putting it on, because I love hanging out with traders, because trading is a lonely business and no one in our personal lives really understand it. But we kind of tailored this one, the best parts of everything that we've ever seen at conferences, boot camps. We really wanted to kind of front the bill and everything from once you show up to when you leave in terms of your food, drinks, activities, and then putting you in situations to meet tons of traders who, you know, might end up being lifelong friends, or the person that takes you from A to B, from B to C. And then also right now, starting next week, if you do sign up for the boot camp, you're going to get tier 2 access to huddieanddom.com for 1 month for free. So keep that in mind. Be on the lookout for that. And yeah, we can answer a couple questions. I got a minute. I know Jonas, I talked to him before on Discord. Be asking about how I feel about OTCs right now. He said ABML just worked. I know that's going to upset Huddie. Some more dollar volume OTCs. Are you interested in coming plays such as CYBL and others? I'll look at that one. Short answer is no. None of those have done anything that have made me too interested. It kind of goes off of what we just kind of talked about in terms of daily charts. And I look at something like CYBL, and if you want to bring it up, Huddie, I see a really beaten down chart, and it's just like, it is, you know, 3 doubles or 2 doubles from the highs. Like, there's so many stocks near their lows in the OTC market because there just hasn't been the interest in the volume there. And these stocks that have been working, like I know DPLS worked a little bit ago. Why can I not type? It worked-ish, but I remember looking at it that day before that breakout around 6 cents. And I would have never been able to take any size to make real money. Like, it did like 40 mil on the day. So to me, there's not enough volume in there right now, and the charts just aren't primed. I need, like Grittani was saying, for me to get interested in OTCs again, I need to see some fresh charts. I need to see some sector light up. I need to see real volume trade near the highs. Like, even if you pull up DPLS and you look at that breakout over 6, like, sure, it was an okay daily chart pattern, but look at the volume in relation to the whole daily chart. Go back 200 days, a year. There's nothing special about that volume that it did around there. It's just a stock bouncing off its lows and kind of stair stepping its way up. So for right now, I'm going to continue to focus on the best of the best listed stocks. If anyone has great OTCs for me to look at, I'll gladly look at them. But I really need something to excite me, and I have not seen it. But also going back to what we were just saying, I do love doing these free stuff and getting people on here. I think one of the cool things about me and Huddie is that we have so many trading friends, and we love bringing them all together and talking and helping you guys, because having so many different points of view, I think, can be really, really advantageous for people. You know, like Huddie said, having longs, having shorts. You know, I don't talk to Grittani that often, so when we sit here and do this with him, it's super helpful to me to sit there and talk to basically one of my idols, someone I looked up to when I first started, and like taught me everything through a DVD, and go, hey, how can we work on exits? And you know, that's just, it's insane. I think surreal. I get nervous when we do these things with Grittani, and it's just unreal. So I think that's the cool thing that about us having so many good trader friends, is just their impact and what they all kind of do differently, and where their edge is, and how we're all still trying to learn from each other to get better.
And what's cool is, like, we all like do certain things very well, and certain things that we don't do the same. Like, we all trade the same patterns, right? But we trade the nuances of the patterns differently, and that's where the discussion becomes good, because we all see things differently, but we're all trying to master the same concept of an OTC multi-day breakout, or a first red day after an extended stock has a multi-day run. Like, we're all trading the same patterns, but the way we get in, our expectations, it's really good to bounce ideas and figure out a method to the madness, because at times it can be very chaotic and can feel very random. And honestly, sometimes it can feel silly, you know, that we trust these charts the way that we do. But after, 5, 6, 7 years of trading, it's just like, at this point, it's like, how can you not, after so much proof of the pudding from what our historic, what we've done? Like, I trust the charts now for what I like to trade. I did notice a question that said, I noticed a question. Considering TG's last comment, first green days end up as a red candle on the same day, so just take singles on price action. I gotta say, like, if you guys are, like, from my experience for first green days, have we had one recently that was, like, good? I can't remember.
I can answer that question if you want, but the answer is no. The basically, well, he said LGVN. I feel like that was a really long time ago. If I'm thinking about the right one, that's not a first green day. But the thing is to understand about that one is even if it ends in a big end green at the end of the day is a green candle or a red candle, the point of a first green day pattern for me, the way I trade it is like there's a specific time frame and timetable for every type of pattern I trade. For an OTC breakout, it's going to be multiple days. For a listed breakout, depending on what day I buy it, it's going to be usually at least one day or more. For a first green day, I'm generally looking at like a 30-minute to an hour type of trade. I'm looking for a lot of factors to come together all at once. Shorts covering, retail buyers getting interested buying at lower prices, day traders coming in to reverse the stock or panic dip buy it. And when all those things come together and culminate, you generally get a pretty good sized move relatively quickly. So for me, I don't really care about the end of the day candle on that pattern because what I'm looking for is for that morning move. So kind of what you said as well, yeah, not exactly just taking profits, but that is the whole point of that setup is for me is for it to be a 30-minute to an hour long trade. So whatever it does after that is moot in my opinion.
It's a good way to explain it. Yeah, you get like and oftentimes when you're buying a first screen, I have NRSN up on my screen. It was in theory it qualified. I didn't trade it, but for these, I'm definitely looking for this very short burst of momentum where these shorts who haven't covered yet are going to get out of their position, the longs are going to chase it, but I still feel like the stock is on the backside of its move. Like I don't really expect a lot of these to go back and re-break out or consolidate nicely off the lows. I'm just looking for that short-term short squeeze. It's not going to last very long. A lot of the shorts are going to be out of their position. If the stock's like down as much as NRSN is the example I have here. But they do produce good risk reward at times. I will say, like, if you can capitalize on the risk reward and focus on the risk reward, back to what Dom was saying, it doesn't matter where the chart ends up end of day. Like, can you capture the meat of the move? And I feel like the meat of the move is a lot more blatant in these backside first green day bouncers than when you have this like breakout that you're trying to swing for this like parabolic move. Like that's a lot different. So yeah, there's definitely a different expectation, and I do find that a lot of first green days do fail. So it's a situation that it's a shorter trade time frame, and each setup does have its own allocated time frame to it.
Let's answer two more questions. I'm going to answer the one that I see right here about volume, and then post your questions. We'll answer one more after that, then we'll wrap it up. It's 9:30 here. I'm on vacation. I have to go pick up the family at a different house. How important is the size of the float to you guys, and what's your sweet spot for the float size? Does insanely big volume trump a very large float? For me, float is not insanely important. I do like 2 to 20, somewhere in there, million float would be my sweet spot. Also depends on the type of pattern I'm looking to trade. And does insanely big volume trump a very large float? To me, because a lot of what I do is keeping an eye on stocks once they've had a big run and looking for a secondary breakout move. I care more about range in the amount of time I'm looking at. So if it's a 2-day run and the stock went from 2 to 8, I don't necessarily care if it's a 50 million float because it just proved to me a couple of days ago that it can, quadruple in 2 days. So I do think, breakout over 8 could yield 10, 12, 14 percentage wise because that's the range it proved to me. So in that type of situation, range is more important than float, and range and float, whatever it is, like insanely big volume is probably going to be a part of that. Volume is kind of its own little thing, but for me, if it's like, is small float matter more or range? Like range is more important to me than float, but I'm generally always going to be looking at stocks that are like under 100 million float when it comes to listed stocks.
Yeah, I mean, definitely the smaller the market cap, the less supply outstanding. It's you have the ability to have more violent moves. That's definitely a piece of the puzzle. And then when you start having that volume churn and that rotation, you have that range. Like that's where you have retail getting stuck at certain prices, and you can get, again, the ability for a stock to move, right? Like the reason we don't trade bigger cap stocks is because they're big, they're big share counts, right? Like the example I like to use is Exxon. And Exxon ran well during this like whole Russia-Ukraine thing, right? Like it had a nice uptrend from 60 to 90. That's fantastic. Like that's a big move, right? But then you go to a penny stock like INDO, which has a very low float, and it does, 7 to 90. That's where I want to be. And it's like, the low float, volume churn, retail gets stuck somewhere. And that's where the focus, that's where big percent gains happen. Like, you're never going to see Apple move 50% in a day, like, ever, you know? So definitely like to focus on smaller market caps and lower floats, just because that's where opportunity lies in terms of volatility, right? And that's what we like to trade, volatility. We just like to, we don't believe in the companies. You know, for short, we're not expecting it to go to 0. For long, we don't expect it to go to 1,000. But can we use this stock in this moment as a vehicle for capital appreciation? And that's the goal almost every day, is where can we find, you know, where can we pick up some money, given our subset of a culture that we trade. I saw a question,
all right,
but I
let's
lost
wrap it up. Someone was talking about where to get started. On HuddieandDom.com, we actually did just release a beginner's guide. If you have any experience at all, it's probably too dumbed down for you. But if you're brand new and this is one of the first things you've seen about day trading or small cap trading, it would be a relevant piece of information for you. It's really, really.
Oh, I was gonna do something crazy. It was crazy, guys. I just got rid of Dom, and he's not gonna be happy. But this is, I suppose, HuddieandDom.com, and what he was going to, let me try to fit the screen. For beginners, God, I'm so sorry, Dom. He's probably still watching it. This is not gonna work. Let me get Dom back. Oh my God, I just messed up so hard.
After it, you won't really see it all over the place being marketed. We're not really that way. We don't really care to do that. It's just kind of growing organically, and people want help from us. We're more than willing to assist, and we absolutely love doing it. We want to help the community. That's why we're doing it. So,
Dom, terrible news.
Thank you for joining. Keep your eyes out. What'd you say?
Your whole speech that you just gave, whatever it was, like, I tried to show HuddieandDom.com to like narrate, and I pretty much just took you off the screen, and then you went bye-bye. And then you came back and you were finishing up your spiel. So there's a beginner's guide, there's tier memberships, there's a lot of we're just producing content. We're trying to put ourselves in the minds of like, okay, when we first got started, you know, what do you need to know? And we created a beginner's guide. Me and Dom sat down and we took turns like talking about different keywords, talking about different setups, that kind of stuff. What else did you say? Sorry, I totally.
I don't know. I just said basically keep your eye out for our free content. YouTube. We'll definitely be doing Twitch again. We have a lot of trading friends. We want to bring on different pairs of, I don't know what I'm trying to say, people, different types of traders. Kind of introduce you to everyone, our community of people that all kind of got started because we all love this game called stock trading. So join us in the future. Keep our eye out for our socials when we go when we're going live on Twitch, when we drop videos on our YouTube. And if you're part of the Huddie and Dom community, we will see you in the chat, and we will see you in the next live session.
All right, guys, it's been fun.
Thanks, guys.
See you later. Did you do this?